ICT order blocks. So today we're going to talk about order blocks. So what are order blocks? Well, order blocks are levels / price / area where big money, aka the central banks, executed their initial positions. When price hits an order block, we can expect some form of resistance or support or reversal. Order blocks can also be used as an exit. So let's talk about the types of order blocks. One is a bullish order block, and the second is a bearish order block. So bullish order block, this is a level / price where we can expect price to hit and receive institutional / bank sponsorship from the bulls. When bullish on the market, we can use this level for buy entries. The higher the time frame, the stronger the level. Now, bearish order blocks. This is a level where / price where we can expect price to hit and receive institutional / bank sponsorship from bears. When bearish on the market, we can use this level for sell or short entries. The higher the time frame, also the stronger the level. Charts. Let's take a look on the charts. So let's take a look on the charts. So an example of an order block, this right here, where we see a bearish candle, then a bullish candle, pretty much engulfing this candle. This, when price comes back to this area, to the body of this candle or to the wick of this candle. I didn't draw a wick here because I just couldn't draw a wick. When the market comes back to the body of this candle or the wick of the candle, we could expect the market to go higher. So that's a bullish order block. Meanwhile, this is a bearish order block where we see price had a bullish, let's just say it's a daily chart, a slightly bullish day. Then immediately we see a lot of selling pressure come to the market. Clearly, that's an indication that the bears have stepped in or the banks have stepped in, because we can see the difference between the volume and the speed and aggression that opposing candle went. Only big money can make the market move like this. Us as retail, we don't have that much power to bully the market around. All right? So that is a bullish order block. So bullish order block right here. And what do we expect? So let's just say price goes higher and goes higher. We can expect when price comes down here into this level, we can expect bulls, or we can really expect the banks to come back in and push price higher. That's the expectation when you see a bullish order block. Now for a bearish order block, this is a bearish order block. All right. For a bearish order block, we can see price went lower when price decides to come back into this area, right? Price starts to come back here and touch this candle's wick or body. You can choose which one you prefer. I personally prefer the body, but sometimes it might not go all the way to the body. It might just touch the wick of the candle, and we can see it a continuation on the lower side. That makes sense? So this is a level where we expect the market to hit. Well, I guess it would be like this actually. Ignore the drawing. It would be like this. We expect the market to go right here at this level where the body is or the wick is. We can now expect the bears to hop back in the market and push it lower. So that's how bullish and bearish order blocks work. All right, a level we see that, okay, clearly there's some displacement, clearly there's some energy in this candle compared to the one beside it, or you can call it a bullish engulfing. When price comes back to that level, we can expect to take a buy there, and maybe have our stops below this candle, and expect price to go higher. The opposing view is if it's a bearish order block, we can see the strength and magnitude that this candle moves with compared to this one, engulfing this candle, right? This red candle engulfed this candle. It's way bigger than this candle. When price goes back into this level or this area, we can expect price to respect that level and then sell off. Now let's go on the charts to see how we can use this. All right, I'll give you some examples. Okay, let's go to the pound, for example. All right, let's just go to the daily chart. Now, pound, for example, an area right here, right? Look at this candle right here. Same thing I showed you on that picture, right? We have a bullish engulfing. You can either draw a line on the body of this candle, or like I said, on the wick of the candle, whatever you choose, right? Point is, we see price go higher, come back into this level, and then pushes price higher. So that's how you can use a bullish order block. And the example is right beside it. We have another example, right? And price also draws these places like magnets, right? Price is going higher, then it's drawn, it goes right back here. What does it do? It uses this level where banks had originally bought their positions, and banks cannot trade their full positions all at once. They gotta feed it into the market, so they can't just they can't just put their orders. They gotta be strategic in the way they put their orders in the market. They have a lot of volume, so it's not easy. They can't just drop 1 million lots, like 100 million lots. They have to slowly push it into the market, right? So the market goes higher, then it comes right back low into this area where we already know there's buying going on. We see this bullish engulfing / order block, right? We would expect price to go higher when it goes there. Same over here, right? Look at this. Price has same thing, bullish order block, comes back in this level, and boom, it goes higher. So we can expect that. Even if you go to the left over here, or let's look at bearish engulfings, you can see how price literally tapped that level, right? It literally tapped that level, and then we see it go lower, right? The low of this candle is 1.36075. The high of this candle is 1.36077. So price literally tapped this candle a little bit more than 2 pipettes, but it tapped it and then fell because of this bearish order block. Look at to the right here. All right, we have another big move where price engulfs this candle, making here an order block. This is where banks has sold originally, in this area. Price comes back there, sells off. All right. If you go through your charts, there's multiple examples. Now, the way this works, you can be more efficient with this, is you want to pay attention to what the trend is. If we're bearish on a high time frame, then you want to be expecting price to respect any bearish order block that presents itself. If we're bullish on the high time frame, we would expect price to respect the bullish order blocks, right? So these are ways you can essentially get into the trade, and I'm gonna talk about the ways you can use it for exit / targets. That's another way you could trade this. You can use the order blocks, right? Let's keep going through the chart, see if I find anything else that is. You can see there's one right here. Boom, engulfing, and price comes back in there, sells off, comes back again, sells off, and price can go there more than once and still respect the level, right? Now, if price, of course, is dancing around there a lot, you want to be more cautious. But for example, a level like right here, we can see an order block right here. Price is kind of dancing around this level, right? And then finally just blasts through. You don't want to see dance too much. It wants to be like, you want to see more of an immediate reaction, or 1-2 candles and it's gone. Look at right here, another order block, right? Bullish order block. This is a level where we can expect price to come down to and go higher. So essentially, that's how you use order blocks for entries, right? Now let's talk about using it for exits. So let's just say, for example, I am bearish on the market, right? And since I'm bearish, which means I'm expecting the market to go lower, right? So if I'm expecting the market to go lower, right, and let's just say there's a weekly order block in the way, right? Let's say, for example, I see price coming down. I'm, making its lower highs, and I'm selling as it's coming down, enjoying the sell. Cool. And I look on my weekly chart, and let's just say on my weekly chart, boom, there's a level right here that's a weekly bullish order block. So this can be a daily chart, 4-hour chart, something less than a weekly chart. But on a lower time frame, lower than a weekly, we're seeing the market drop lower, right? It's making lower lows and lower highs. We're enjoying the sell. But when price gets right here, that could be my target, because a lot of times those order blocks are also like magnets, like price gets drawn to them. So if I'm selling, when price gets here, I can't, and price does something like this, goes a little higher. Do you think I'm not gonna sell? I'm not gonna sell this, because if price touches this level, that's a weekly order block, and then goes higher, chances are it could just keep going higher. It could just keep going higher, and start breaking these highs and start a higher and start a bullish trend. So what I do is, if I'm in sales and there's a higher time frame, for example, this is a daily chart, and I'm selling, and I see it's a weekly or a monthly bullish order block, I'm gonna use this as my target and get out, or even reverse positions. So you get that right there. I can use that to reverse positions. Now let's just say it's a 4-hour chart, and I'm selling, and I get to a daily order block. I'm gonna be more cautious. It could break through those levels, yes, but you want to be more cautious. This is when your trade is more likely to fail, when you see when the market is in the order block. You don't want to be forcing the sell. You gotta let the market play out. You gotta let the market show you its hands. If you're trying to sell right here when the market touches the order block, you're gonna be out of luck. You're gonna be SOL for the most part. So I'll use this as an exit. It's a 1-hour time frame I'm selling, or 15-minute selling, and I see a 4-hour order block. I'm probably gonna exit my trade right there, and maybe look for a reversal, or just maybe out the market and sit on my hands. And a good example of this was, let's go to, I think, SPX gave us something that was nice this week. So check it out, right? Boom. And this a weekly. This on the weekly. This is a bullish order block, right? Look at how price came in this level, by the way. Literally got drawn to like a magnet. Boom. Shot up higher, right? That's the beauty of this order blocks. Now price is coming all the way down. I could expect the one to get stopped here. If it doesn't, my next target will be right here. So I'm not gonna try and sell once price gets here, right? I'm gonna be out the way. If price gets here, that's my target. So that's the way you can use it for a target and not necessarily entry. Now, since it got here, do I just enter the trade? No. Right? We can see the market still heavy. The bears, it's really a heavy market. I'm not gonna just enter here and just start buying, expect the market to go all the way higher. No, that's how you can use it for a target. Now, there is times where, of course, you see the opportunity to get in around this area, depending on certain things like market structure breaks and stuff. But for the most part, in this particular occasion or scenario, I'll use it as a target. Now, the market's still heavy, so I don't know. I'll probably sit on my hands. and not really expect much of a buy going forward until the market gives me something maybe on a daily chart, right? So that's a way you can use bullish, bearish order blocks to or you know, order blocks for like targets. Now let's look at USD CAD, right? For example, I'll give you another example, right? See, this market's falling. By the way, look at this beautiful order block. You know what I mean? Like, boom, right? Boom. Let's just say enter the sell. Stop loss above here. Your target will be this area because I like to target the most recent swings. That's a whole nother conversation. But you enter sells here. That's a bearish order block. Boom. You could have entered another sell right here, right? Order block. Boom. And now, there's another thing about order blocks. Sorry, but I don't know if I'm confusing y'all. But I don't want to confuse you. So, if this is considered order block because we have a bullish candle, then we have two consecutive bearish candles, which completely engulf this candle, making this level a bearish order block. Okay, so sometimes it might take two consecutive candles. They got to be consecutive though, in order for me to now consider here a bearish order block. On the other hand, it might be the opposite would be said for bulls. If we have, I'm gonna try and draw this out. Let's just say that's a down candle, right? And then we have another bullish candle, right? Let's make this green. Okay, cool. Then we have another candle. That ain't. Now this level will be considered an order block. When price gets back there, we could expect buys to occur, take the price higher, right? So that's another form of it. So that's what we see right here for a bearish order block, where we have a bull candle or a green candle, update candle, then two down closes. Boom. This area is now considered an order block. When price gets back in there, we can expect sells. Okay? With context, of course, you want to make sure the higher time frame is going lower. So that's how, that's another way you're going to see those order blocks, right? Remember, there has to be consecutive candles. Now, for USD CAD, let's just say you're selling, right? You're selling this thing. Now look, like I said, the higher the time frame, the stronger the level. This is an order block right here on the weekly. So when we saw price trading up in there, right? Let's go on the daily, see how it looks. When we saw price, let's just say next week going up in here, there's an order block. There's a daily order block within this weekly order block. So that's a strong validation or confluence where you can expect price to sell off. Because we already see that the weekly, right? Boom, boom. This is an order block. So when price went back in here, and this level, we're already bearish. But then on top of that, we see a bearish order block where we can then take a sell. And then look at the melt, it just melts, right? Then we see it bounce from here. Now, why is it bouncing from that level? Check it out. This right here is a weekly order block. So price went all the way down. Does it just stop somewhere? No, it stops right here where we would anticipate it to stop or reverse from. I was expecting this reversal because it's already selling off, and then boom. Now price can still go through here, but it's gonna give it at least a tough time first. And sometimes this can also lead to just a whole reversal and keep going higher. So I typically like using them for, like I just explained to you here, for entries or for targets or exits. If I was in this sell on USD CAD, let's just how swing trading, this could have been my target, right? I could have been in this sell right here, and my target would have been down here. And what would it have looked like? Let me just draw the little where's this thing at? If I was in a short from right here, stop loss above here, this is 55 pips, target down here 1-5, boom, that's a swing. All right, so the higher the time frame, you know, you can expect more volatility and more push on the market. So that's how you use that. Now let's look at the pound, right? We looked at the pound already. Let's look at NASDAQ. Did we look at this already? Look at NASDAQ, right? Where does NASDAQ go to? And this is most recent, right? This is boom. This just happened. This was happening this week. Price melted, right? First, when it came down here, this level held it back a little bit. We saw a little push higher, but then it pushed into this opposing weekly order block. And if we saw something there, maybe we could have just taken a sell, depending on what you see in there. Well, as it was leaving this area, we had an area where we could have taken a sell right here, right? Because guess what we have? A bearish order block. Price goes back into this level. Boom, working out target B, the next weekly order block. It's like a 1 to 4.7. Boom, we'll be done for the day, done for the week. And it goes right here and stops. There's a reason why it does that. All right. So anyways, order blocks, that's how you use them. I'm trying to see if I can think about anything else that I want to give on order blocks. There's other elements to it, but for the most part, when you see them on the high time frame, avoid, let's just say you're bearish, right? For example, right here, you're bearish, and price gets to this level. You want to be more careful trying to take sales to continue lower. Even though, yes, the market has been heavy, it's been selling, but it's bouncing off of this level. Either you sit on your hands if you miss a move, or maybe you look for a reversal. But you also want to be careful on looking for reversals. Or calling the bottom of the market is hard. But I will sit on my hands. For me personally, if the price already got all the way over here, I'm just gonna sit on my hands. I'm not gonna do too much, right? Until maybe the daily gives me something that I can work on, maybe like a bullish order block. But clearly here, there's nothing. I'm looking at this wick, and we have this bearish candle. I mean, it's just, you know, this is it hit its objective for the most part. Now, can it keep going lower? Yes, but you want to watch out for those levels, because those are areas where you might be expecting markets to keep going lower, but you didn't even realize on the weekly or on the daily hit a level that's of solid resistance. Like these are levels of resistance and support I use. I don't use the traditional support / resistance. Like, no, I use these levels as my support / resistance. So you want to be careful, essentially, whenever price gets into these higher time frames. For example, over here, right, this is a bearish order block. And by the way, look at the respect. Look at this candle, right? We created a bearish order block. This price goes right here. Like we said, we can use the wick or the body. It goes right in this area, and we can expect a sell to happen. Oh, look at this beautiful thing, right? You see that? Within the weekly, we see a daily order block. Isn't that beautiful? Take a sell right there. I mean, that's how you want to look at price. I mean, just pay attention to these levels. I mean, you can go look for it on your charts. Don't just listen to what I said. I mean, go check it out, see what you see on your charts, and see if these levels are holding up. But and now we see it again, right? Price is back in this level, and we see a little sell-off happening. And now we kind of see a bearish order block taking place on the weekly again. So what will I be expecting? I'll be expecting the market to sell. Maybe if the market comes right here, I'll take a sell. Now, it all depends on what the market's doing at the time, but that's a level where I would probably be looking for a sell-off, all right? Because this is a weekly order block level, and then we see a daily order block, so we can't expect a sell-off to happen in that level. So I'm trying to see if I find any more examples, but I hope I got my point across. I mean, I want you to go check it on your own, on your old charts. Let's see if Bitcoin has anything we can that I like on Bitcoin. Let's see. It's sitting right here at a bullish order block. So I'll be less aggressive taking sells. Can it sell off? Yes. These aren't end all be alls. There's other things you have to consider, but these are levels where I want you to at least pay attention to. Go on your charts, go find out for yourself. Go see how the market's reacting to these levels. When you lose a trade, watch where you look at a high time frame, look at your 4 hour, 1 hour daily, see if the market was in a level where it was more likely going to reverse because it was in the order block. All right, but Bitcoin just been falling. There's other ways to enter trades, but just talking about order blocks, that's how you want to use it. I mean, this is the only order block I see right here on Bitcoin. You see this 3 candles consecutively. The market came back in here. You could have taken that sell. That's pretty much the most I see on Bitcoin. Let's use this as well. All right. Boom, sell off. Boom. There's another order block. Boom. It didn't go above the body. I mean, the wick, it was close, but boom, another sell off. So even on Bitcoin, we can see that, all right? But essentially, I want y'all to go look on your charts. That's pretty much it. I don't think I have anything else to say about order blocks. If you have any questions, I mean, just leave it in the comments. I appreciate if you can like, subscribe. The channel just getting started. So if you want more game, more knowledge, just let me know what you want me to talk about in the markets. And have a wonderful day. And keep going.